Good afternoon, everyone. Welcome back. Thank you very much for joining me again. Um, you may be aware that I came across with you guys in regards to Forex trading, that was indices and commodities and Forex. Well, today I'm going to talk about arbitrage. So, again, my topic is derivative trading. And in terms of arbitrage, just going to talk about how you can do arbitrage, sorry, that's a better word. So when we say arbitrage, it means that we're taking the difference between the two platforms. So this, you may remember when I was talking about trading previously, I talked about single platform, but this time I'm going to talk about two platforms, how we're going to do the arbitrage taking on the two platforms. Okay, say you have a couple of platforms. You sign up with your broker, you can see clearly. Okay, and we say it's a high latency platform. Okay, so when I say high latency platform, I mean there is a greater delay for the to receive the time signal uh, in terms of price action. So when we're receiving a signal for price, there's a delay. So you can put it down as price delay. Okay. So there's a price delay if you're using a high latency platform. Now these are your two platforms here. Okay. And say we are doing pound against a dollar. Actually, I'll tell you what, let's make it easy. We'll use oil instead. Okay. Now you have two CFDs here. We can name one as plus 500 and the other one is say IG index, you may have heard of. Okay. Now, having these two platforms live, say if you have, start off with a small lot size. Lot size. And we say 50 barrels. Okay? And you have 50 barrels for that as well. Okay? These are your lot sizes. Now, your 50 barrels could be priced at, say, $12 and $12 when you're dealing with CFDs. Now, when you're doing the arbitrage strategy in live markets, you need to see the price, okay, for both platforms. This is platform 1, this is platform 2. Now say for platform 1, which is plus 500, the price of oil, we'll take an estimate. Say it's 47.96. Okay? And the price here in the second platform is $48. Okay? We're dealing in dollars, US. Now you have two platforms, and now you can see that because it goes through the various exchange system. Now you can see price here is $48 and price here is $47.96. Now there's a difference between the two. Okay, now there's a difference of 4 pips. All right. Now, if you do, you can see the price here. That's 47.96, 48. Now 48, obviously, make it simple. $48 is greater than 47.96. Okay. Now what we're going to do in this scenario is, because this is 48, so the price has gone up, we can distinguish between the two prices. Now you'll do a buy here. Okay, so you execute your trade and you'll do a buy for 48. But for 47.96, that's right, you do sell. Okay? Now, you've done the buy and you've done the sell. And now you think to yourself, okay, I've executed both of them. Now, where do I stop? So that's for you to make a decision. Would you like to go 10 pips up, 5 pips up, 20 pips up? Say we take 10 pips, for example. Okay? So your target is 10 pips. Okay? Now when you do 10 pips, say you're closing at, say we close at 10 pips. Okay? And at 10 pips, if we take the buy 48, that will be 48.10. And this will be 47. You can see the board. It won't be 47 actually, it will be 48.04. Okay? Alright, now you've got 48.10, 48.04. Now you can take away the difference. Okay? And you're left with actually that's 6, excuse me, my mistake. So if I'm going 10 pips, 96, 48.06, okay? Sorry about that, my sincere apologies. So you've got 48.06. Now you can see from here there's a difference of 4 pips. So because you went 10 pips up, okay? Bear in mind the markets are very volatile, so if you're trading in the morning 7 to 9:30, markets are volatile there, and then in the afternoon the markets are very volatile around about 1:30. That's when the Wall Street opens and the Big Apple and the other stock exchanges. We're talking about Chicago as well. Okay, so you got 0.04 here. That's the difference. Okay, now say if you're doing say this is for example, or for the 50 barrels, and you put $12 here for the CFD. Say approximately this is a dollar a pip, for example. Okay, dollar a pip. So by doing the arbitrage, you've earned yourself. So by doing the arbitrage, you've made a profit of 4 pips. Okay? So you made a 4 profit, so that's $4. Simple as that. That's $4. But what you need to do, because as I mentioned earlier, the markets are very volatile, you need to close between the two platforms. You need to close at this price. Say if you're going 10 pips, so you need to close both of them simultaneously at once at this price. Sorry, 48.10. 48.10. So you need to close at 48.10 straight away, immediately. As you reach, if you're going for 10 pips, you see the market's volatile, you close this at 10 pips and you close this at 10 pips. Okay, I hope that's clear and understandable. Keep watching my videos, and hopefully I'll be bringing you some good videos. Thank you very much for watching. Stay tuned and don't go away. Bye for now.